What's going on, guys? This is Aaron from Departures Capital, and welcome to the video. In this video, we're giving you guys a big update on the e-commerce focused company called Logiq. Now, as you know, we brought Logiq to you guys very recently. They're a high growth e-commerce focused company, and they just released some very exciting new news. So we're going to be going over that news, taking a look at the stock, seeing how it's performed recently, and generally just giving you guys an update. So I hope you enjoyed the video. Of course, for full disclosure details, this is a sponsored video. Check the description down below for full disclosure details, along with thoroughly reading our disclaimer and always remembering that these videos are not financial advice. So with that being said, guys, I'm excited to bring you these updates. Of course, if you do support the channel and all the videos that we put out, kindly smash that like button. It means the world to me and it helps my videos so very much, along with hitting that subscribe button and the bell for notifications on future videos. And drop me a comment down below. Let me know your thoughts on the company, the recent news, and let's get straight into it. So first, we're going to talk about the news. That is the most important thing. Then we'll get into the stock performance, give you guys, a little bit of background, just talk about what the company does, just to reiterate a few things. But Logiq board approves plan to separate AppLogiq and DataLogiq into two publicly traded companies. So this is very significant. So a global provider of award-winning customer acquisition solutions announces its board of directors has approved a plan to separate its DataLogiq and AppLogiq businesses into two independent, publicly traded companies. Following a strategic review of the company's growth strategies and structure, the board determined that creating two standalone businesses would best position DataLogiq and AppLogiq to capitalize on their respective growth opportunities in the rapidly evolving global e-commerce and fintech landscape, and would be the best path to creating shareholder value. The plan calls for AppLogiq to be acquired by another existing or newly formed publicly traded company. The AppLogiq segment includes mobile e-commerce solutions of recently announced Indonesia Perkasa WIP. WIP is the operator of APOs Go food delivery service and APOs Pay mobile e-wallet. The separation of the two businesses would result in shareholders of Logiq receiving an equivalent number of shares in the new AppLogiq company. So let's hear some words from Brent Cision, president of Logiq. So we believe separating AppLogiq and DataLogiq into two pure-play publicly traded companies would unlock tremendous value for our shareholders. As independent companies, each would have a sharper focus and greater flexibility to pursue M&A opportunities in their respective markets for e-commerce in the US and fintech markets in Southeast Asia. We see this also enabling considerably higher peer valuations compared to where Logiq is at today with AppLogiq and DataLogiq combined. As one analyst recently pointed out for Logiq, the sum of the parts are greater than the whole. In fact, based on AppLogiq's revenue growth trends and gross margin expansion, our expert advisor CBI Partners estimates that AppLogiq's standalone valuation should exceed $100 million. There are several companies that Logiq has partnered with in emerging markets that are currently reviewing a potential acquisition or merger with AppLogiq. Such a transaction could form a substantial platform for digital services to be offered in high-growth emerging markets. Cision continues, with recent SPAC transactions and IPOs, emerging markets fintech-focused company valuations range from $2.5 billion to $40 billion. Companies such as C trade on the NYSE under ticker symbol SE, Grab NYSE AGC, and FinAxel Nasdaq VPCB. With much larger companies to choose from and already high valuations of 2 to 4 times gross transaction value and around 20 times revenue, our goal is to eventually command a valuation of over $1 billion. So as we know, in such a high growth market like e-commerce, that type of growth and these types of valuations, they're very relevant in the market today. You can see the companies trading at those billion-dollar valuations. So there's no reason why, if AppLogiq continues to execute, everything goes according to plan, the company could potentially reach a billion-dollar valuation at some point. Now, of course, that's not financial advice. Nothing is guaranteed, but due to the nature of the industry, the growth that we've seen, it's definitely possible. So we can see there, Brent Cision, president and executive chairman. We have interviewed him also. So you can take a look at Departures Capital for that interview. But now let's take a look at the stock and see how it's performed. So if we take a look at Logiq over the past 6 months, the stock has had two periods where it's, essentially bottomed out. So that was around the mid to low $2, specifically around $2.20. So recently, Logiq just hit a low of around $2.17, bounced all the way up to just over $3. Zooming into the past 3 months, we can see here that Logiq has broken that $3 level, but it's still nowhere near where it was before in the $4 range. So by the looks of the charts right now, Logiq is bouncing off of a level of support. We'll see if that rally continues, but now might be a very interesting time to take a look at the company, especially if you like to try and find an entry point. Now could potentially be an interesting time. Once again, not financial advice, simply just what I'm observing. The fact that the stock has bounced now technically twice off of those levels of around 220. But take a look at the charts for yourself, always recommended. Also, head on over to the company website, that is logiq.com. And then if you want more information regarding the investment side, you can head on over to logiq.com/IR and you'll find all the information, company profile, presentation, analyst coverage, everything an investor would need to know or might want to know. But that's it for the update, guys. Let me know your thoughts in the comments. I think this is an interesting strategy for them. They'll be able to focus on both aspects of their business, and they can take that business in the direction that they want to. Hopefully at the end of the day, this will create more shareholder value as opposed to just, trying to combine the two. So we'll see, guys. That's it for the video. Hope you enjoyed the update. Drop those comments down below, and we'll see you guys in our next video. If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thank you so much for watching, guys, and I look forward to seeing you in our next video.